Hey everyone, welcome to your daily update for SOL and BTC. So we did get that bad closes yesterday, second dump, sort of saw that coming. Now what happens today? It's pretty much going to be along the same path really. We either have some better closes today and maybe we get the sign of reversal, or they're going to close down again today and under trends, etc., and then it'll just be rinse and repeat. Don't know if it'll be violent. If it has a dump, it's pretty hard to tell whether they'll dump hard and fast or whether it'll be some more of a slow grind. But it's definitely at this stage looking a little bit more like it's a correction rather than just a straight out liquidity grab. So looking at the 1 day here, clearly we could go down and take that 110 liquidity. Some of the closes on BTC over the last couple of days have got some pretty low targets, so it's and everyone online is talking about 90s and all that kind of thing now. Got to be absolutely realistic. Those targets could happen. We don't seem to have a reason just to go there in a straight line, however, which might be why it's sort of just coming down, stays down, builds the next series of closes, goes under the trend, moves the trend, rinse, repeat, it just continues down. So at some point, what it's going to do is it's going to shift some of these trends, etc., to support. And when it does that, it's going to bounce off them and go up and take whatever liquidity is sort of sitting here to the upside. So I still think there's a really high chance that we push up into the 114 area. There is some very concerning trends up around that area that could send it as low as the 90s. And we haven't actually gone up and hit that resistance since it was created. So it'd be like first touch of trend resistance. So yeah, if we do get a little bit of a pump, I'll definitely be taking any profits that are there to be taken, at least half of them anyway, and then seeing if we reject badly. And if we get a dip, it's still really a case of buy the dip if it makes sense to buy it, or scalp the dip. But it only makes sense if you're actually dipping into support and not creating support and then opening straight underneath it, which is pretty much what they've done the last couple of days. So looking at SOL, the 108 area down to about the 103 area definitely looks like it's in the sights of the big players at the moment. 109 could potentially bounce back up to 114. So it'll be interesting to see whether they sort of close just under that area and then dip down and then come back up. Unfortunately, if they make resistance at 114, it probably means that they're going to dip, bounce, and then hover around and then keep on going later. And likewise, we're still really trying to get back up over this 221 area. You can see it's become pretty much a big spike on that liquidity now. It's a breakout level. It tried to get up beyond that at one point, and then it basically just tanked down from there. So that's our key area now. Our key area was 225. We've now sort of dropped a range. Now we're sort of 221. And yeah, pretty much we're just going to see how this day closes. And looking at the 7-day, yep, so still plenty of liquidity to take to the downside. Areas are the same. There's definitely more to take to the upside on the 7-day, and so at some point we might get a short squeeze, but it just we need to start to see some more positive daily closes without resistance getting created before we can really consider that. And the 30-day, well, the 30 days kind of doom and gloom because they've come this far now. There's a lot of these positions that would have been in profit, but now they are trapped or they're borderline, and if we get another push down today, then even more of those positions get trapped and it makes more sense to go and grab them. So what I sort of think, looking at the 30-day, is that there's really not a lot of reason to push up past 114 at this stage. So that's kind of shows up the same as all the other time frames. But it does show that, dumping down to 105 or 106 or just any of those lower areas would be a decent sweep. So, we've got to consider that as our short-term range. Most of the targets that exist to take us down to prices that are below 100K exist on timeframes that are sort of around 38-day plus. So, a couple of them are sort of in the 100-day camp, so it could be things that play out over a really long period of time or more bear market moves. But the more we go down and stay down, the more the levels change, and then we just go down and we stay down, and then we go down and we stay down. And that's why this looks more like a correction rather than a liquidity grab, because liquidity grabs, you don't hang around in the lows. You don't let people open more positions to then go take. You don't let people get back in the game and then, come up with you. You just go down, you take, you go. So yeah, at this stage it's looking pretty bearish still. On SOL, one of the closes today brings this 191 back into target, which is pretty realistic, particularly if we close down today. So we'll find that time frame when we look at the charts in a sec, and we'll talk about that. So having a look at the chaos, so if we sort of zoom out on the 1 minute, if there is such a thing as zooming out on the 1 minute, you can pretty much just see the range is exactly like what it's showing up as on the liquidity charts. We're going down, we're going up. BTC has sort of been making this almost, I guess you'd call it a top to be swept. There's definitely a case for BTC going up, and that could be quite a positive thing for SOL. Like, to really get all of this fixed, we need SOL to stay flat and BTC to spike, or we need BTC to absolutely pump and SOL to pump slightly. Or if we really want to fix the monthly rejection on SOL, we actually need SOL to go down while BTC goes up, and that doesn't happen terribly often. But we've seen that over the course of making these videos. And there's one guy who gave me an amazing compliment in the Discord, saying something along the lines, I never would have ever believed that prices could just go completely in the opposite directions at one time, but you picked it. And so sometimes that is just what it takes to actually get these things back in sync, and to do it quickly would be for little lines on BTC to be going up and for SOL to be going down. So okay, so let's have a look at these charts. So SOL BTC is breaking basically all of its interior support trends today. However, it is going to shift. So if it closes as you see it now, which is with this wick on the bottom, it will shift this trend to here. And based on that, you might actually get a little bit of a push back up, right? And it could retest this hard close level here at 20015. So you may get that little bit of a strength push. The other thing it could do is just stop at the 19524 break level, but it came from the top side of that, so most of what I see here would imply that we may get a little bit of a bounce. Now the hold level for this is still down here at 18380. So the other option is it closes here, shifts the trends, and if it does this, it is actually very bullish. It dives the trends, hits that hold, and then comes back up and tries to come all the way back up into that top range, because it's not a hard close range until today. So as far as what it might do, it might dive, grab the hold, and then push up to retest, and then if it can get back inside, it'll continue to move up. So there is the potential that today is the day that you get the final nasty dump on SOL, or you get a pump on BTC and a flat SOL, or so you just basically need these two tokens to be doing kind of things extremely different to each other, or one of them has to go really bad while the other one goes subtly bad. So if it can do that, we might get this whole correction over with, and then that could be our reversal point. So coming across and having a look at the safety assets, this is actually good as well. So safety assets have rejected from the daily hold. We've created this huge amount of range trends up the top here. If it doesn't close yellow, then it doesn't break the downtrend, and that gives us the ability, and it also doesn't hard close the lower daily break level. It gives us the ability for it to actually continue moving down, or have a push up and reject down. So this is all basically good as far as getting a little bit of momentum back into risk assets. Oh, it's got some TP showed up on my phone. Can't remember what I was. Oh, my SUI trade. Yay. Okay. So if we have a look at how this, oh, by the way, if this closes yellow, it's not great, but not the end of the world. If it closes yellow, then we are going to be relocating one of our trends, and that gives a first touch rejection, and then safety assets can still go down and alts can still pump. It's only if in the next 2 hours it comes back up and closes over top the body, over top of these 65% levels, that it could get really bearish from there, because then the range actually becomes more between here and here. So you're in basically 65 to 65.6 at that point, with the intention of probably trying to break these trends. So yeah, we want this to close blue, or we want this to stay down. We do not want it to close with no wick on the top side. Okay, so looking at now, I've already shifted this trend in advance because it is not actually here at the moment, but looking at the totals, so totals minus stables, we have enough of a wick on the bottom of this candle for us to do either a bit of a sweep of it and then a pump back up to retest the broken range here at the top, or we could just bounce off it and then come up to again retest that broken range, maybe come back up to try and test the trend. But effectively what we are creating on this close is a range that is sort of in either this, or if it gets over the 50%, that. Okay, so we could get a dip back down to 344, or a sweep of 344 on the totals, and then I'd probably be expecting to push back up to at least 354. So this is sort of saying, yep, we could get a bounce today, and that bounce might lead to a reversal. However, just keep in mind we are still in a monthly downtrend on SOLBTC, so I don't know whether the bounce is going to be a sustainable bounce if it does happen today. Okay, looking at it from the other direction. So we're on trend, we're in the hold level. As far as what happens with this today, not much really. It could bounce back to the trend and have another go at it. The positive thing is it stayed inside the daily break. So if it goes down and closes below that 3.56, it could get more bearish because it'd be under the break and under the trend, and it could reject and then target a lower level. Although we do have another hold level just right there at 352 that we haven't touched yet. What could be a bullish outcome for this is that we dive, we hit that hold level, which is effectively taking the trend, the range liquidity, I should say, and the hold liquidity, and then it bounces up to try and break the trend. So this is showing signs of potential reversal. Anytime you see sort of a wick on the bottom of a candle like that, it means that accumulation has come in, and there is buying interest here. So, and anytime you don't break out of the bottom of a range, then once again it shows that the bottom of the range had buying interest and enough to hold the price up. So this is actually looking good for temporary reversal. Okay, BTC. Now this is splitting hairs. So it hasn't broken the break level at 110 on the daily, but it's also not shifting the daily trend, and it is breaking these upper trends. So that one's actually gone now. This trend here technically gets hard closed and broken by this candle, but it doesn't actually break the lower trend. So this could try and push up, but it doesn't really have a lot of room to play. It's still under the downtrend. So what this sort of means is it could get either a little move and then a dump, or they could push up through these, retest the back of the range trend here, which would sort of be around that 13,800, and then dump. Or because it is actually the first hard close, and this is the one that makes the most sense with where the liquidity is currently sitting, because it is the first hard close of the upper daily range, it may go up to that 114.320 level and reject off that to have a bigger downside move, so that's the one that does kind of make the most sense with liquidity. Now, if they do a sweep first and they don't grab that liquidity up there at the 114, then maybe it does give a reversal, because if it comes up and takes this liquidity at 114, but then settles in the area between the trend and the 114, so let's say it settles above 12,800 tomorrow and below 300 or 114,300, if it actually settles in that area, or particularly if it gets back above this down facing range trend and stays around that 113,800 area, then it probably is trying to induce people to build shorts, and it's probably trying to build liquidity up higher, and that would be the first sign that, yep, okay, our reversal is starting. So if they get up into that sort of 114 after sweeping the lower, and they hold it up there for the day, and they make it look crap, and they make it look like it's going to die again, but structurally they maintain that level, then they're just trying to get you to short. And if they do that, then they're going to reverse this thing and go up. So that would be a pretty bullish place to reverse. Right? So now looking at the 2-day close today, it's going to lose its trend. But as long as it has a wick here, losing the trend moves the trend. Moving the trend can get support of the trend. So this could come up for a retest of the origin level as high as sort of that 116, but it has these other trends which have confluence. So we've got a range trend coming through here which has confluence with the 113,900, 113,800, 114 level if it pushes a little bit up into it. And we've got just the normal downtrend up there at 115. So the confluence of this trend move would, as long as we close with this wick, would have, it sort of says to me that it's going to bounce off that trend, go up, target this, and then it either gets back over it, holds over it, we continue, like with the 1 day, it's all just confluent. If we get over it, we hold over it, we continue. If we reject off it, we go down, we go deeper. So that's pretty much what that's showing us there today. So the important thing is to close that 2-day time frame with a wick capable of having the opening price above the trend. So really we can't go much lower than where we are now. We've sort of got to stay over this 112 area, and yeah, then we hit the trend and hopefully bounce on first touch. So okay, 7-day. So 7-day, this is also what you start to notice. So when they are going to dump the price, what they will do is they will close candles down, engulf like this, create hold levels, resistance, breaks trends, moves trends, etc. To do that, this would have to close under 111,491. And that's entirely possible, and that means the day gets very bearish very quickly because they'll be pushing it down under there, creating a hold level, and they could use that then to break all these trends and keep on going down to lower levels. If they do that, then you'd really be expecting them to come down here and take this 106,024 liquidity. And the key thing is you'd be expecting them to take it and not come back up, because they're creating resistance and going down and then coming back up into resistance, which basically means that they don't want it to come back up. And that's kind of what a correction is like versus a liquidity grab. Versus if you look over here at what a liquidity grab looks like, they did not close down on this candle. They closed just up. Now they still dumped because they wanted the liquidity. They grabbed it, and then you see they shoot up here to the trend rejection, and then the trend rejection initiates the correction. So, here they closed down, they went up, they rejected down. We have not come up to a higher level, right? So pretty much everything past about that 6th of August on the 7-day chart here is sort of more in line with trying to create lower levels. And here you'll notice they did not close the candle up, so they didn't really want to create support here. Right? So the question is now, what do they do here? So if we close under 111,491, you should probably be longer term bearish. If they close over that, then it can still be short term bearish, it can still dip, it can still sweep the 1-day trend liquidity and bounce, but you can probably start to be a little bit more bullish, right, as far as what's going to come with Bitcoin on the longer term. And it may even start to mean that, hey, we're not going to see those 90s until, much later. This could be the first sign that, the 90s are a bear market move rather than a flush before the bull final step. Okay, looking at the 14-day. So 14-day is actually potentially going to close in a bullish manner. So, and it's a higher risk front side trade. This was the resistance that was created up here at 117899. There's something just really off-putting about this time frame, just because it didn't actually bounce. It didn't get to 117899. It got to 117855. I don't like gaps like that, because they're sort of, from one perspective, you go, is it a rounding error? Was that the rejection of that hold level, or was that the rejection of the trend? Because it could have just been the trend that rejected and the hold level never got hit. Now, if the hold level never got hit and it's still sitting up there, it's a target for the lower trend bounce. So a time frame like this is actually showing that we might create a hold level if we stay over the top of 111700. If we go up a little bit more, then we're going to have a couple of trends, including a range trend and a standard trend, to actually support the bounce. We do have a target at 117899 that technically didn't get touched, and so we could actually bounce the trends and the hold and head up to that level. So this is almost starting to get quite bullish, but it's a 14-day time frame. So does that mean it can dive down here and fulfill those lower time frame obligations first? Absolutely, it does, and then it can go up. Okay, so where this can get bearish is if it simply just closes down for the day. If it simply closes down, then it's going to be underneath the trend, and it could reject off that trend and come down. It would also be a break of the uptrend if it closes down for the day. So that there would be a tipping point of basically 111491.2 if it closes down for the day. And yeah, it is pretty damn bearish if that closes down, to be honest, because even if it shifts the trend with almost no wick. And by shifting the trend with no wick, there's no actual interior trend support. You've got older trend support. Maybe it depends how much it goes down before it closes. It's just if this candle actually closes under, and I know it's a big drop based on the way the price currently looks, but we have seen these things move like this. If it closes under the 111491, kind of bad. If it closes under 110871 for the day, which means it would be under everything as far as support, and the trend move that would be associated with it would have no support, it's really bad. Like at that point, you're talking about coming down and potentially retesting something in these 87s, or you might get caught by one of these trends. But basically, if you reject a trend, you typically travel to a hold. You don't normally get protected by a trend. Rejecting holds target trends, rejecting trends target holds. That's kind of that's the way horizontals and diagonals interact on charts. So yeah, so this could get very bearish. It's definitely the first time frame I'm going to be looking at after close, just to see how it closes, because it's the one also that's so polarized that it actually gives us the most hope of a pump back up into that 117 area. Okay, the 19-day close today. It's probably going to be on the wrong side of its trend, so gives it room to dump, gives it room to hit something like the hold here at 105 and then pump back up. But again, big time frame. So time frames like this can actually go up before they go down. It's also going to create a range trend, and this one actually gives me a bit of sort of more long-term bearishness, really, because 19-day is a long-term time frame, but it's not that long. So coming up and hitting that range trend that's sort of going to be between 117 and, I mean, all of this resistance, we're actually underneath this range trend from back here as well. All of this resistance is basically going to be 114 and up, and that resistance is capable of hitting the 105 price point. So yeah, it's a really mixed call as to exactly how this is going to play out. For it to be a bit more bullish, what you want to see is you want to see it really get up over 113, even get up over 114 for the day and close up higher. But there's no way to really make this time frame a bullish time frame unless we close over 117335 for the day. So everything about this kind of implies down, unfortunately. But it could be, 19 days, or sometimes it takes up to 4 candles to play out these things. So it could be just a bear market move, I suppose. There is that possibility. Next candle could go up above trend, bounce off trend, sweep the highs, give us a new high, even if we have some massive, pump to the upside and then come down. But keep in mind, you've got these levels at 105. They are targets. And we are about to probably open on the wrong side of that support trend, which makes these 105s even more realistically achievable targets. So this 105 has been a target ever since we rejected off this topside trend. That is where it wants to go, and it's got the ability to do it next candle if it closes on the wrong side of that trend. So a bit bearish. 38-day. So this will be one of these ones where we again can see the signs of intention. So if it closes and creates a hold level, which means closing below 111.192, very bearish because it's creating 38-day resistance to the upside. Okay, if it closes where it is now, it's still going to have a bit of a fight between these 114, 115 upper resistances that it's currently in rejection of, but it does create a support trend to the upside, which comes in here. If it closes up over 115 for the day, you could actually be very bullish on this time frame, because a close over that actually puts you back up above the topside trend, but still keeps the candle blue, and that's important because it then creates an uptrend, and it doesn't have anything to encumber pump from that trend because you're already above the trend resistance. So yeah, how we close today is pretty important for this time frame, but I wouldn't expect any miracles. It would be just good to not see a close under the 111.192 level, because it's showing that, hey, they actually don't want to have any big rejection here, or if they do, it is a liquidity sweep. So the last couple of days, although there's been a lot of liquidity taken, they may not be the liquidity sweep. The liquidity sweep might be what comes in the next 24 to 48 hours, and the last couple of days might have just been really more so about trapping those longs, because like someone in the Discord mentioned recently, there was no way to trap those profitable longs to the downside unless they went real fast on the first dip. So yeah, we might still get that sweep and then go, but as long as we stay over that 111.192 for this time frame, then it's okay. Okay. This time frame sucks. So this is the 133. So the 133-day close is going to be under resistance yet again. So this is just kind of, all this is really telling us is that we're probably going to have a blow off top. We're going to come up maybe through this topside level. If we reject off it, the next rejection would probably be about the 117 area. If we have a blow off top, we'll just continue to go through this. We have 133 days. Somewhere in that 133 days, there will be a trend that effectively, or a candle that fails to actually close into this trend in accumulation. And so, if you just briefly look down here, you start here. This goes through it, but doesn't break it. This goes through and breaks it. Trend moves to here. This never touches the trend. That is your first sign, and although it's a 133-day sign, that is your first sign that you're now in a bear market, right? So that there, because this never makes it to this. Okay, and because it never makes it to this, it's just going to have to keep traveling down until it finds, funnily enough, some support to then actually go into the next bull market. So as it currently stands, we're okay, we're touching the trend. But if we get a high time frame close at some point that does not touch this trend, wherever it may be, then we're definitely at that point in a bear market. So we want the next candle to go up and at least hit this thing, because if it doesn't hit this thing at some point in its life, it's going down. The support level for this is going to be a retest of this broken RT that's down here. So just remember this number for potentially a bottom for if we do go into a bear market, if cycle theory is all true and all that jazz. If we go into, just remember it's good to look for laddering in around that 78 level, because that could be one of the bigger time frame levels that actually can send us up. So right, let's have a look at SOL. Okay, so SOL on the 1 day, same thing. It's sitting in amongst a whole bunch of range trends, which has kind of kept that price really, stuck. We're still in a downtrend. We're not capable of opening the next candle over the top of that day trend, so over the top of that downtrend, unless we can sort of push all the way back up to, that 220 level. So that 221 was a really important level. It really would have given us the ability to get over top of the trend and actually try to go up. If we go up from here, it's probably just a liquidity sweep to the upside before more of a dump. So could happen. E.g., we could open the next candle below the trend. It's also a hard close of the daily range at the top, much like BTC's hard closing its daily range at the top. So yeah, if we open under the trend and have some amazing rally on news or whatever all the way up here to 231, just be aware that we started on the wrong side of the trend. Unless we can maintain a price point up there, we're probably going to come down. Okay. So one of the interior trends will shift from where it is now. Oops, not that one though. It's this one. It's going to shift down to here. So this is actually not bad really, because it's going to give us a very sort of tight little wedge. But we could bounce that, we could sweep that liquidity, we could come all the way down. Like it's actually almost primed to have like a real sort of either pump and dump or dump and pump. The structure's perfect for it. So the way it goes first is probably going to be the one that really tells the story. So much like BTC, if we go down here and hit this hold level at 203 and then come back up to then go above the trend before the end of the day, then we're probably going to go up, not only hit that topside level, but probably continue. And the thought process behind that is that they've got all this liquidity sitting here between 217, trend break. We've got all this liquidity sitting up here between 217 and 231. If they take it first, it usually means that they want to just keep going lower. But if they dive the trends first, hit the holds, and take that lower liquidity first, it usually means they want to utilize the liquidity up here quickly as a cascading effect to bring the price back up higher. Now, once they take it, people will chase it, but if they do it in that particular fashion, it's because they want to go back up and they want to get back above these break levels. And just because a break level is, or just because a range is hard closed, doesn't mean you can't get back up inside it, because otherwise price would only ever move one way after it breaks the first break. So yeah, what I'm looking at here is a close would be super bullish if the candle stayed blue but got up to sort of around that 219 level. That would be bullish, because we would shift the trend to the bottom. Currently it's actually a bit of a as you can see, currently it's actually a bit of a pain because it's above us. We actually want that to go away. The easiest way for it to go away is to have a wick on the bottom of the candle and move it to there. So we want that to happen. But it would be even more bullish if we actually were able to open the next candle on the top side of the downtrend and shift the current trend from being resistance to being support. And if you're starting to get all this, if you've watched enough of these videos, if you just think about what's happening, buying's coming in, brings the price up. That then means that you now have support down at this level, because that's where the buying began to bring the price up. And then selling is not capable of keeping us under the downtrend. So if you open on the other side of the downtrend and you got support to the bottom, and then it just comes down to, okay, does a big player want to open a position? How are they going to open that position? Well, they're going to open it into liquidity, so they're going to dump the price down, liquidate below the trend into the hold, and then open their size position using limited spread, and then they're going to push it up, right? So that's effectively, what's going on. What all these lines actually mean? They're just about people buying and selling, and where support suddenly becomes, and that's kind of how TA works. Okay, looking at the 2-day close. So the 2-day close is a dive and a trend break of the interior, so we might as well get rid of that now. The interior is gone. But it's not breaking this. So no matter what it does, nothing moves, nothing breaks. So this is also saying that, okay, well, we might move our 1-day today to being a supportive trend instead of a resistance trend. We may basically not move our 2-day today. So the next candle could come back up and retest the other side of that, okay, which then gives you sort of confidence of coming back up. Now, it can actually go back up beyond that, because realistically, it's not a broken trend yet, so it's just a dive trend. This is sort of a backside hold level in here. So you'd run something off this wick, and then when you run something off this wick, funnily enough, you get that same level, that 231 level, which is the daily range retest. So yeah, this is, I wouldn't say this is bearish or bullish, but it's the fact that it doesn't have a flat bottom, the fact that the daily is actually looking okay. You may get a dive, and if we just purely ignore all other time frames, you've got this level coming through here, which is an origin level that has not had a retest since it was hard closed. So actually, where is that? 106,500. So it may come down and retest that anyway, because that would just be pretty normal structure for it to do that. You've also got another older level, much older level, from back here in February, which has not had a retest since hard close, and that's at 208.9. And there is an exchange-based 3-day hold level sitting at that with a target of 214. So we could see a reversal, a decent reversal, or a scalp once we move into those levels. And they would be diving the trends on the 1-day, which would be the sweep of the liquidity to push back up into the liquidity in the upside. So the only thing a little bit bearish about this is that you've got this older range trend coming through here, and it looks like we're going to close underneath it. So you really want to be closing on above 217 on this time frame, even if it was to dive later. However, for it to do the dive, the initiation of the dive may just simply come from the fact that it closes under that range trend, rejects off the backside of it, and then does the dive. So much like they pushed it down below that weekly range trend, and then within a second they tapped it, and then they dumped $20 or $30 or whatever it was the other day. This could be the same sort of thing happening. So more bullish, less likely to have a rapid fire dump if we close above 217. Still actually relatively bullish that this might be turning into a liquidity sweep finally, and then a reversal. But also just be prepared to act fast if we close below this range trend, which is about that 216.4 area, because that could make it happen really quickly. Okay. 7-day. 7-day is bearish. So again, 217.112. This will potentially create a hold level. Now it creates a hold level and doesn't move a trend. So there will be no new trend for this to actually attack, which is where it gets a little bearish, because the actual first trend that it could attack is actually down here around 197. There is this hold level, this break level retest that needs to happen at 205.9. So that's kind of confluent with our lower time frame levels. But a break level retest doesn't typically stop a rejection from a hold level. So we kind of want that to close up and not create that hold level. Now, if it doesn't create that hold level, it will be on the underside of trend. It can then reject off the trend, and the break level can stop the trend. So how badly this thing dumps really depends on how it actually closes there today. And at the moment, it's going to be a bad close. If it can creep up above 217.112, then we can start to be a little bit more bullish on SOL, because that is, like with BTC, that's showing that, hey, yeah, they're closing down, but they are doing it in a way that doesn't create such resistance in the way they close, so it's kind of what you're looking for. What you're looking for is not a repeat of what you saw over here, so if you look at these two candles, you look at these two candles back here from November, when they closed down and created that hold level, because this move up had been so big, your trend would have been just roughly, along here somewhere, and you see what happens. Down it goes. Big move down. So we have been going up very much like that for longer. Actually, we've been going up, not as much, but we have been going up for longer. 4 candles, 3 candles. If we close this, it can be very bearish. So just bear that in mind. And I hate to say it, but it really could, if it doesn't get back out of here in 7 days, it brings 191 and even the trend down the bottom here into play, which is about 165. Right, so that's the first one that's looking pretty bad for SOL. Okay, 14-day. So 14-day has rejected the origin levels that were at the top here. It's rejected. So these were old origin levels. It's rejected the break levels. This is sort of, once we got into that anything above 147, we ran out of reasons to go up. And then 247, and 253 was our final daily hold. And of course, where did we get? We got to 253. That's it, down. And so since then, we've pretty much been down. We've got hard close levels for retest down here at about 188, 189. We're in really high time frame support already, so anything under 214 is really high time frame support on things like the 18-week, and those time frames are saying we're going to go up. But the thing is, it can take a really long time, and it's more of a swing type position where it goes down, builds a really big position, and then moves back up. So when I saw it bounce just off 214 the other day, I was quite surprised, or 213, I think that 18-week, where is that 18-week? Actually, we'll show that at the end. But as for this time frame, we want it to stay above the trend, ideally, open the next candle, because then it will be a dive of the trend from the reverse and not a full retraction under the trend. It's got a pretty good chance of doing that as long as it stays above about 212 for the rest of the day. Then it's going to be above the trend. Okay, so that's kind of all we have to consider with this. What it will create is an interior uptrend, which is this. It's going to be on the wrong side unless it closes up. Really has to get over that key 221 level to be closing up on that new trend. And the irony of it is that if it gets to that level, it doesn't create the trend. So it is healthy to have some down, because you get trends by creating down, and if you can maintain them, they become support. So but yeah, I'd say that this is setting up to close down, but not in a catastrophic way, be on the wrong side of the uptrend, have a dive, and then probably cling to the trend, as it goes up, and maybe at some point get over it and then continue up. That's pretty much what that's looking like it's doing. So I wouldn't say it's a catastrophic end of the world, but it's probably implying we're going to see some more down. Okay, 19-day. So this is where things start to get a little bit better. So the 19-day is most likely going to open on the wrong side of its trend. We'll just check that out on the daily. Let's see. Are we right? Are we wrong? Yep, just under it. Of course it would be, right? So it's looking like it's going to open on the wrong side of its uptrend. But this is where we start to get things like, 2022 range trends that travel all the way through here. And we're still above those, and that's all that's important. We're above the really high time frame older stuff. And so yep, what could happen? We could bounce off the backside of that trend. We could have a dive, but the next support, or next trend that could act as support, is down with confluence around that 108 level. Sorry, 208 level. I must scare the crap out of people when I say 108s by mistake. Sorry about that. So yeah, going all the way down to maybe that 208 level. Anything below that 208 level, there's support there. We've got range. I think we're actually hard closing. Oh, we have hard closed. So it's got 188 as a hard close retest. What is that coming through there? That's big. 195. Yeah, it's the first time. It's the first time we've managed to hard close above that 195 origin level. So that's big. So there is support down below us. It's just a case of how much do they sweep it, how long do they keep it going for, but that's actually, yeah, it's not bad. It's not bad. And then there's a range trend just down below that as well. And we're hard closing the range trend for the first time ever. So yeah, it's not bad. Another cool thing too is it doesn't move the resistance trend. So this doesn't move the resistance trend to the top side. It has heaps of support that it can sweep, and then it can take off. So that's pretty bullish. Okay. This is kind of not. So the 38-day is going to shift the trend to the top side. That does give us another potential reason to reject if we head up to that 254, 253 area. Yeah, but it is hard closing the lower trend. So that gives us potential to retest the 185, 184 area. We've still got a hold level down here. We haven't broken the range. We've still got an upwards trend support. It's pretty good. Everything about this is pretty good. So I would be a little. I'd put an alert on this one, guys and girls, and just say, yeah, maybe be a little bit careful if it pumps first, because if it goes first, it's more likely to reject down. If it goes down first, it's more likely to try to break up. So that's not looking too bad. Okay, 133-day is way better looking than BTC. So we're getting another 189 hold level. There are so many timeframes that are now having this as a hold level. It's almost like that is going to be the support, which is quite good. Now, it's a bit hard to actually figure out what the downtrend is on this one. This is definitely a range trend. We know that much. And it's above that, so that's positive. But it's a bit tricky to figure out because this is not a full 133-day candle, and there is no other accumulation candle to really attach it to. So it's a bit hard to figure out whether that happens. And I mean, if it does, it's just basically 152, as an area of interest. So that's all that's really saying. But I mean, it'll be a great. Sorry, 152. I keep doing it. 252. If it comes down first, it could just bounce off the hold level and head up to the trend. So, there'd be a really good long in there, or just a key area to be adding if you're already in a swing long from the higher levels. That is not a silly thing to be doing right now, because we could just go from where we are. We can go up, but if you needed to know where to add, those areas on the shorter term, like the 208, 205, 203 areas, would be more shorter term, and then bigger areas are more like the 189s, and below. So, okay, and let's go and have a look at some of our others. Most of these have taken an absolute beating. I don't even know what trade I took on that. So I've got a position open on SUI that is just going to TP not based on that. So it must be based on, there we go. Okay, so just doing a quick scalp on SUI, just back up to this 345 level based off the daily trend. I think I entered up here somewhere because it was already bouncing. I did add back on this bounce, which and then TP'd on the backside of this range, which was the TP I got on my phone at the start of this video. And now we're just seeing, does it go back up there again? I'll probably just keep bouncing this. If this comes back, I'll just bounce it again. If it comes back, I'll just bounce it again. It's going to come back up and retest that range. And it's more likely it'll do it on the next candle if it closes here as a blue candle, because closing blue is the hard close of all of these levels above. So retests generally come after things are broken, not before. So, otherwise it's just a deviation. So there's no real, the downtrend is not restricting it. So this is, if it comes back down, probably just add some more back in and just go back up. Just keep making money out of that like a little robot until eventually it goes off and closes the monthly. And what else we got going on? ENA. So still really want to see this come down here and hit this 5428, because at least the 5428, it's done. Like that would be the monthly short complete, and it shouldn't go any lower than that. It should then find support and bounce, because it won't have any sort of downwards pressure after that. So basically once it gets there, definitely keen to look for entries. However, the trend can stop it. So if it hasn't got there in the next 7 days and it closes up above these trends, then I would look to, find some kind of entry on here and take it up there. So that's all that's really saying. It's actually in a relatively good position to open the next candle on the top side of the daily downtrend. So it's looking a little bit stronger than some of the others. And that may be because it's got this daily hold at the top here, and it could be looking to come back up as a temporary bounce to the 6599 area. So trade it if you want to trade it. It's pretty risky considering it's still got monthly down pressure on it, but I don't think it's going to go to zero from here, that's for sure. It's more likely to go to $1 from here than it is to go to zero from here. And glad you TP'd at the range trend on World Liberty Finance. It's tanked. So this has got a hold level, untested hold level up here at 2249. So there might be a trade in this. Okay, so this trend will shift here. The bounce of that trend, as long as we stay inside that range, gives you some pretty defined targets. So here, what's that? That's the older range. Here, 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 and here. Okay, they would be your targets. So pretty much if it bounces off this trend and stays within that 0.1940 area, you don't want it breaking this range, then bounce the trend, and then you could scalp it to the 2040, the 2084, the backside of the range trend, which is not a broken range trend, so it can get above that. It's probably then going to reject off the 2138. But if it does get back up inside that, because realistically the hold level is the target of the trend, so that gets you that 2249 as a target. So yeah, but I would also just say that maybe if it comes down too quickly at the start of the day, then don't enter straight away if you're going to take this, because you got this deviation up here on the top side of the downtrend, which means more often than not, they'll want to sell down here by doing a deviation. So big players don't pay our prices. Big players, they sell up here and they buy down here. So, and they do it with the fact that you can spend 24 hours going below that trend before you have to come back up. So deviations, they get people to capitulate. It would be way easier to get people to capitulate if they think that it's going to break down. So that's what that's telling me. What's this doing? Not much. It's a weekly. If ZEUS closes with a wick on the bottom, then you've already got a range trend on the top. So you've got a downtrend. It's on the appropriate size of the side of the downtrend. This is 5 days from now, by the way, guys, but girls. But if it does close like that, then there's going to be some kind of support trend, like a reverse trend that's probably, has it ever been lower? No, it's never been lower. It's good to see people keep shilling shitcoins. So what do we got here? See if we can find this trend, eh? And too many lines there. So does that point? Okay, so we're in an interior. There's our lower trend. It's reverse trend, so we're downtrending, obviously. Yep. Okay, so it could shift to here as an example, and then it could sweep these trends, and then because this is one of those odd instances where your range trend is your interior trend. So if this candle was to close like this today, it breaks the range trend, creates a dip, moves a new interior trend based on the wick, but doesn't actually take away that range trend. Okay, so based on that and being over the top of the downtrend, you get a dip in to take all the liquidity down here, and then you get a push back up for your first target as a TP as the reverse of the range trend. Because if it hits the reverse of the range trend, it could just reject off that and then go to a lower low. Because biggest problem with this chart is there are no hold levels. So kind of the best risk reward ever, because if you'd actually been following this downtrend here, you would have bought the sweep of the downtrend here at 10 cents, knowing that it was going to bounce at least back to this hold level. And the next sweep of that downtrend, the hold level is actually all the way up here. So it could do that. And but unfortunately, the risk here is that you don't have any downside hold levels. So if the backside of one of these trends on the top rejects, there's just nothing to really recover it from. And it's pretty critical it gets over the top of this downtrend, because there is no hold levels down here to break this downtrend. So it's either going to go to zero or it's going to bounce. But there could be some good scalps in this next week, so keep an eye on it. Or even actually, if it comes down to this trend again, it's still within the range. So if it comes down to this trend again, you could probably get a scalp on it, even within the week. Okay, Cook is dying. It's going back to that. It hasn't hit it yet, but just put an alert on this range trend running through here, which is sort of sitting about that 9 cent mark. If it goes into that range trend, then you could expect it to sweep back up. Hype. So I don't know if anyone took that trade. I took that trade, but just that scalp that we had in there, and then got out because this thing looks like it's dying. So we've got 5 days to go. It has to get back up inside there, or it has to create a wick on the bottom side to create some kind of range trend to bounce off the range trend and try to travel up. So we'll keep looking at this and see how it plays out over the next 5 days. There'll be another trade in it for sure, but it's just, is it here? Is it down here? It's hard to know. So, but that first one works, so let's get rid of that. It's job done. And for anyone wondering, if you're new to these videos and you haven't looked at anything on fib scalping, you have a range, you have a hold candle, it's a weekly time frame, so there's no downtrend to really stop it. There is the potential that it could reject off the backside of this uptrend. Dial it down to a lower time frame so we get a bit of an idea on what it looks like, and put our so we just put this line in so we know where the candle opened. So this is the candle that opens, starts traveling down, enters the area of interest, which is anything below the 1, and then goes back up to the 1618. I TP'd just in here because I just didn't trust that the trend wouldn't stop it. But you know, it went all the way to the target and then rolled over and dumped. And we'll keep going down. So that move is now complete. You don't try to take it a second time. That'll be the death of you and your portfolio. So it's done. And then now we wait, and we see if we get a range trend. We see if it stays inside this upper range. Maybe it breaks this range. Maybe we get short. You know, it's all just maybe until we see it close now. So that's hype. Say it's kind of lost its bullish upwards monthly momentum. So I'm not going to do anything with this based on a monthly, but I will long it if it comes down here. So let's just put an alert on this. If we do get that one final dump in alts, it could be to, you know, come down here, sweep liquidity, hit that hold, and then go up. So we'll long that if it comes down there. And I think that's about it. Oh, ETH. ETH's a dirty word, right? So ETH is still within its weekly range. There's nothing in there to say that this thing is breaking down on the weekly. But it has got this really nice juicy hold level here. So I'm just watching this. If we get a dip down into that hold level, look for a low time frame reversal on something like the hourly, and then we'll run it back up. There's no resistance trend to stop this, but there is this range trend running through here. So there is the potential that this has a pump and then a dump, which would be really nasty for people to see that happen. It could even sweep that liquidity and come down, but looking at this is actually a little bit bearish for the overall market, really, because if you consider that ETH has now built a top and it's failed to break through it based on the hold level it created in here, which is the front side of the ranging, the next thing it's got to do is get to this hold level down here at 3871, and then it's got to try and use the 3871 to break that trend. So if it goes up and hits the trend first, I'd be pretty bearish on this. If it goes down and hits the hold first, then yes, it might come up, break the trend, and then head off to a new all-time high. So I know we don't look at ETH really all that much, but it's got all the same stuff going on. You know, it's got hard closed break levels that need to be retested. It's probably got origin levels, I'd say. I think that was that was the origin level that caused the pump. Once it broke through that 4096, I remember talking about that in the group. So yeah, we're just seeing basically what this does now. But if it dips down on this candle, which means it's open from the top side of all the support, and if it enters that hold level, then it's a very good risk reward long. So that's it. That's all I'm watching, and like, subscribe, and all that stuff, and let's see how this day closes, and hopefully it closes nicely, and catch you on the next one. Geez, it's been a long one. Sorry.